When I build my portfolio, I ask myself 3 questions. Number 1 is, what are the stocks that I want when I retire or when my kids inherit my portfolio to be in there that are going to be the best returning stocks over 40 plus years? These are the stocks, many are technology, that I think are going to dominate the future economy. This is why Apple and Tesla are some of my favorite stocks. Throw in Amazon, Nvidia, Google, Microsoft, most of the big tech stocks. These will do well over a 40, 60 year time frame, probably well above market average. Additionally, I've got CRISPR and Editas, 2 stocks that I think could change healthcare, cure diseases, instead of treat them like most healthcare providers do today. Now, the second question is, how can I diversify away from majority tech? And that comes with financials that tend to do well in a different market than tech does, as well as commodities. So for this, for all stocks, you have to look at quality of balance sheet, their earnings power, their moat, their margins, and whether or not they can improve. But this is where I add JP Morgan, Fremont McMoran, because I love copper. I think that'll be well needed in 40 plus years, as well as Vale. And I have Apache as well for energy, because even in 40 years, I think we're still going to use oil. Now, the last part is more on a shorter time frame. This is more advanced. You really have to understand businesses and where specific markets are going. So these are more secular bets than even just saying I like technology. This is where I add small caps that I think are going to re-rate higher in the next 3 to 5 years, as well as grow. So I like companies that look like value companies based on their multiples, but really are growth companies, or should be, over the next 3 to 5 years, growing EPS 200%, increasing margins, increasing revenue. I like to see 30 plus percent growth on revenue. Now, my biggest stock is actually Pepsi Barada. You guys know I've liked this stock for a long time. It's done well for me, so it's actually become a bigger part of my portfolio. I also really like Coherent. This is a stock that could fall in the first category, but I think deserves a re-rate higher. There's other technology stocks like Kimball Electronics, as well as Corning. Corning is a company that you can own for 40 plus years. But these stocks all have shorter term catalysts to re-rate, namely AI for those technology companies. After those 3, I think about allocating to emerging markets in a more general sense. So picking up INDA, which is India exposure. You could go the ETF route from the get-go, and I wouldn't fault you for that. I personally like picking stocks. I think I'm fairly good at it, and I've had good success over the past 15 years of investing. I will make a substack going through how I look at the financial statements, how I do market analysis, and just diving deeper into these 3 points of contention, and then the ETF spread that makes up less than 10% of my portfolio. Stay tuned to my Substack for this. I also like writing about historical stuff, like I did the VOC and the history, and I really enjoyed writing that. So if there's a historical deep dive I can do, a case study, because I really think that learning from the past is the best way to predict the future. It's never going to be exactly the same, but stuff tends to happen similarly over time. Let me know what subjects I should write on. Thank you.